Hey guys, welcome back to Compound and Everything. These mini videos are going to be covering some of the questions that you guys have been asking me, whether that be on the Q&As on the community page or on Instagram or via email or wherever it might be. Now, I have a very long list of questions from the last 12 months, a lot I never got to in videos. So I'm going to try and make, however many, to try and get through as many of these questions as we can that are still relevant today. And yeah, hopefully you guys enjoy. So the first question from Alana is, what is the perfect three-fund portfolio for you? And this is in regards to the ASX or ASX listed funds, she says. This is probably an easy one for me, but this is based on my personal situation and of course not advice for you or anybody else watching the video. I would simply split them up between VAS, SPY and NDQ. That would be my three-fund portfolio. If I had just hold it for 40 years, that would be what I would hold. I don't know what the exact portions would be, but it would be a combination of those three for sure. I mean, I'm a big fan of VAS. It's got a long history of providing great partially franked dividends and decent capital growth. I'm a big fan of NDQ for obvious reasons. That sector is not getting any smaller over the next 50 to 100 years. And then obviously SPY being the S&P 500, well, that is what it is. I mean, if Warren Buffett tells me to buy, into an index fund for the rest of my life, and that's the one, well, then that's going to be in there as well. So I hope that answers your question, Alana. Feel free to leave more in the future. Now, the next question comes from A. Campbell, who I recognize that name. You've been watching our videos, my videos since the very beginning, so I appreciate that. The question is a bit of a loaded one. Do you think the US market is in a bubble due to the big tech companies, and will the market correct itself anytime soon? I have been, for anyone that follows me on Twitter over the last few years, I've been a firm proponent of the fact that I think the market is overvalued as a whole. However, what's difficult at the moment is that 2020 earnings due to COVID and most companies around the world just had blockbuster returns. Not all, obviously. There were pockets that struggled and it was horrible for them. But when it comes to the tech sector especially, a lot of those companies not only had pretty decent results, but also just had their valuations go up through the roof. The problem is that 2020 is kind of warping some of those figures. So if you look at it right now and you forgot COVID had happened and you're just looking at the market going, okay, this is what X company is making and this is what their valuation is. Yes, I guess you could say it's a little bit overcooked, or it is overcooked. But if you compare it using something like, price to earnings ratio to past recession indicators as a whole, we're not quite there yet. I think we got pretty close at the start of last year, but we're not quite there yet. And don't get me wrong, I'm not saying that is an indicator. None of us know when the market will correct. But ultimately, as a whole, yes, I do think that the market is probably a little bit overvalued globally. But the US market, yes, it is. It's often traded there, and it can trade there for many, many years. It would not surprise me if there isn't a correction for 5 years or more. Because we're in unprecedented times, and I'm not going to go into that in answering this question, but we are. What was it? 25 to 30% of US dollars were printed last year. It's just insane. So yes, there are a lot of factors affecting a potential correction, but I don't know if it'll be anytime soon, and it doesn't really change too much of my investing philosophy at this point. So I hope that answers your question, and I appreciate your support for the whole way through since I started the channel. Now, the next question comes from Kurt, who has asked me, how would you start a portfolio today assuming you had $50,000 in cash to invest or less? Now, this is one of the questions that was asked a while ago, and when I say a while ago, maybe 6 to 12 months ago, and I never got around to answering. Now, I can't tell you how to start your investing journey of $50,000, that would be financial advice, and that's not what the channel is about. However, as an example, let's say that Bob, and Bob is an imaginary person, he doesn't exist. Let's say Bob had $50,000 right now. statistically speaking, the best thing that Bob could do would be to dollar cost average into index funds and hold them for a very long period of time. Which is a bit of a boring response, I know. But the further I get into this game, the more I realize just how small the percentages of people that can actually outperform the market over a long period of time. You get all of these places reporting at the moment that we outperform the market over the last 10 years. Congratulations. You probably outperformed the market off your results of the last 24 months and averaged it over 10 years. But you also had one of the best markets in modern history. When I look at if I'm beating the market or not, first of all, I haven't been investing long enough to know if my results are beating the market over a 20, 30, 40 year period. But that's only when it counts. If you end up being 55, 60 and you've been investing for 40 years or whatever it might be, and you have achieved a 20 or 25% return or whatever it might be, it could be 15, you are in that very small percentage because most people can't do it over a very long period of time. I have a feeling that this is going to turn into a bit of a skewed market over the next 10 to 20 years because we're going to have a lot of people that might have had a God knows how much return on cryptocurrencies or other, general market securities in the last 24 months that could simply take all that money, put it in index funds, and still significantly outperform the market percentage-wise over the next 40 years. But yes, if Bob, our imaginary friend, was going to start investing with $50,000, it would probably be wise of him to dollar cost average his way into an ETF or multiple ETFs that suited his risk tolerance. So I hope that answers your question. Anyway, guys, that does bring me to the end of this video. If you are interested in asking a question that might be featured on this channel in a video just like this, feel free to leave it in the comment section below. I'm going to be trying to make a lot more of these shorter videos, just answering simple questions when I can. And when I can't answer them, we'll try and do a bit of research together and try and find the solution. Anyway, guys, thank you for watching. I appreciate your time, and I'll see you in the next video. Cheers.